What's up, guys? Welcome back to UCL Forest Academy. Once again, you are welcome back to UCL Forest Academy. So, in today's lesson, we'll be talking about market structure, and under market structure, we'll be talking about flip zone. Okay, we'll be talking about flip zone. We have already made different videos on this very particular topic. It's not like a different videos. We started from the first part of the market structure where we explain what is market structure, the three phases of the forex market. We explained the uptrend, the downtrend, the consolidation. I was still able to explain the accumulation, manipulation, distribution. What about the Asian session, the London session, and the New York session? These are like the things I covered up on that very particular fixed session of the video. I told you guys that if I'm to do all this thing on one single video, it's going to be so long. So I need to cut the videos. I need to put the videos in different sessions so that when you go through this one, you fully understand what I want to teach you there. You understand everything, the idea, the information, you'll be able to understand it, right? And then we talked about on the second video how to spot external structure and internal structure, which is very important because if you fail to understand how the internal structure works, start from how to enter from the internal structure, then targeting the external high is definitely going to be a difficult one for you. We explained that on the second part of the video. I strongly encourage you to go and watch it. Don't skip any part. What about understanding what is the BOS and in details? What about the change of character? Each role in the forex market we did explain on the third part, and that's the chart versus the BOS. The key difference between the two of them, the failed swing high and the lows as reversal, which is SMS. We did explain all these things on the third part of the video, which is like the third section. So what I want you to do is that, in case if you didn't see all those videos, then maybe this was like a pop-up on your YouTube account or whatever, or like a suggestion to you. All I encourage you to do is to click on my channel. Click on my channel. It's going to bring it to the particular page. All you have to do is to click on playlist. The moment you click on playlist, YouTube is going to redirect you to all the playlists I have here on YouTube. So focus more on the one that is already here, which for now, the time I'm making this video, I've not created it because I'm still making the videos, right? So you're gonna be written as a market structure lesson, right? Market structure VIP lesson. So click on it. It will help you to see the first part, the second part, the third part. All right. So what's the reason why I'm dropping this thing on YouTube here? Just like to say some very big thank you to you guys because I really acknowledge the fact that you guys are really trying by following up the channel. Some have been sharing the videos here on every particular channel. Some has also been sharing. Some have also been leaving some good comments. Some have been reaching out to me. Have been thanking me for what I've been doing here. So I just thought about sharing the particular VIP content to you guys for a way to say a very big thank you for the way the channel has been growing. So what I want you to do is please like and subscribe to the channel. In case if you have not done such, like and subscribe to the channel. Turn on your notification button so that you be the first person to be notified by YouTube each time I drop a new video. What I do here on YouTube are so good. It has packed up a lot of benefits. I've dropped so many videos in the past. You could check out some of the videos I've dropped. If you have been the one that has been struggling to understand how the forex market works, all you have to do is to click on my channel. You're going to see some couple of videos I've done in the past. If not one or two, could be of a massive helpful guide to you. Okay, please don't forget to leave a comment. Don't forget to share the videos as well. Don't forget to recommend one of your friends or share it in your social media channels as well. Okay, so before we begin this very particular video, I just want to announce to you guys that our online class registration is still on. All you have to do is to reach out to us with the number you are seeing on the screen. If a particular number you are seeing on the screen, should in case if you didn't see the very particular number, there's already a number on the description. Use that number to reach out to us on WhatsApp so we can guide you to the very procedures on how to join our online class. So it's not like your usual online classes where they normally draw videos for you. At the end of the whole day, nobody cares to call you, nobody cares to reach out to you, nobody cares to assist you to know what you are doing, whether you understood what you are doing or not. This very particular class is so different. It's nothing like that is here. We try our possible best to keep track on each and every of our students to know how whether they understood each topic we taught them. Okay, we have a tailored way of to bring out the best in you, and it's not like we have a after 1 month or 2 months we are done with. It's a lifetime mentorship class where we'll keep on assisting you because we know that they can't really understand forex on 1 month or 2 months. You need a lifetime guidance. It's not like there's no time you will not understand it. You will definitely understand, but you still need somebody who should be looking up to, somebody that will be there to consistently guide you. Okay, all you have to do as a Nigerian, you just have to pay 75,000 naira. The person that is residing outside Nigeria will have to pay 80 USD. All you have to do is just reach out to us with the number on the description below, and let's help you on the procedure that you on the procedure to join the class. Okay, it's one of the best classes you will ever been looking for. Think about a more private mentor, where like a more private session way of teaching online. It's not like your previous online class. Okay, I think we have delayed a little bit on starting the video, but I'm just trying to make some introductions to you guys. Very necessary. Okay, so now we'll be talking about what is flip zone on today's lesson. We'll probably try to talk about what is POY, point of interest, and then unmitigated POY and mitigated POY. We try to understand how to use the POY in the forex market. This is what we are going to try to explain on today's lesson. I encourage you to watch the videos to the end. Should in case if you have skipped any part of this very particular video, just come back. Don't be in a rush. Don't try to be faster than your shadow. This is just forex we are talking about. You need to understand the knowledge, you need to understand the idea before you start executing those orders. Don't try to execute orders that you don't even know how it works. It's very important. Okay, so now we're going to be beginning the video by explaining what is flip zone, and we'll try to understand even the difference between the flip zone and the POY. So what is the flip zone? What is a flip zone in any way? A flip zone is a price level or area that has switched its role from a support zone to a resistance zone, or vice versa. When you hear me say vice versa, it means it can be a resistance to support. Okay, I come again. A flip zone is a price level or area that has switched its role from a support to a resistance level. Do you understand that? So, or vice versa, or whether it is from a resistance to support level. Understanding what they say is switch its role. It's just like you. How do I? What kind of example will I give us in terms of human being? Okay, let's say that you were previously a head teacher, or maybe you were teaching primary three, or maybe you are the one that is controlling kids in primary one or whatever, or is it college one or whatever. Then at the end of the whole day, they say it's time. I think we have to. I think we are doing well here. At this, you have passed this level. Let's take you over to primary three. So the moment they have done this thing, I think they have switched your role. They have switched your what? They have switched your, it was not really a role. I think they have upgraded your level, right? But it's more like you have switched classes. Okay, you have switched from primary one, I think primary one, right, to primary three. So this is what for woman being aspect. But when we talk about for the forex market, sometimes the market will have to switch a role just to be able to get some particular liquidities or stop losses, or maybe just to get enough well to keep pushing to the upside or to the downside. But I just want to tell you guys, with the help of even my particular diagram, you will come to understand that this flip zone that you are hearing is still the same thing as support and resistance. There's nothing special about all this whole thing. Whenever I'm teaching you everything about forex, I try as much as I can to let you know that all these things are the same, but these are like different terminologies. You'll still hear after this particular video, maybe one day you come across a YouTube video, or maybe you come across video on TikTok or wherever, you see somebody calling this flip zone another name, and that is when even you yourself might have some little bit of issue. You'll be like, you thought the person is trying to do something else or something new. You don't even know that this is what you have already learned, or this is what you already know. But because of too much names and too much English names they have already attached to this, somebody will come out and give it a name, give it this, give it that. You see, the same thing, somebody will just rebrand it in different forms, just be calling unnecessary names. So you just have to understand that all these things are the same. That is why I keep on working. I try my best to make you see all of them in a more similar manner. Okay, like I've told you, the flip zone is the same thing as support and resistance. There's nothing too special about it. Now, if you doubt me, right, look at how it works. So we talk about this thing. Look at how it works. So the flip zone actually works this way. The moment the market prints a new high, remember I told you that each time the market prints a new high, in terms of when I was explaining the beginning of the particular market structure, that was on the first session. I told you that whenever the market prints a new high, the market is likely to print a what? A new low. And that low it prints is what we call a higher low. The high it prints is what we call a higher high, right? And then I told you that the new higher low will be able to print a new what? Higher high. Then when we went to break of structure, I told you that whenever the market prints a new high, the market will only want to retrace to target that very particular high. Is all those things not the same? They are all the same, because if you hear the definition, you see that all of them are doing the same thing. But when we talk about flip, it means the market will also target the high, the target that higher low the market printed that gave that higher high, the market printed, that's the very particular higher high, the market printed that resulted to this higher low. The market is going to target it the way it targets it to form a new higher high. The same way it will target it to break a structure. I understand it now. So when the market breaks it above, now we know on that very particular one I told you guys is that the market will have to now retrace before you go in for a buy. This time around, when the market is retracing, the market is targeting the previous resistance zone called support. It's targeting what? The previous resistance zone called support, or it might target the previous, depending on the trend, or it might target the previous what they call it, the previous resistance zone turn what? Support. So this was like the previous resistance zone. We know when you hear about the word resistance is something that's resisting price to go up. Resistance is something that's what that is resisting price to go up. Now let's say you forcefully gain entrance into a room by breaking the door, and then we know that if you still want to come out, it's either you follow through that door you broke, or if you want to break another door, you will come to start, you will struggle before you break that door. The moment you are struggling to break that door, the next door, maybe you don't want to follow the door you break, you want to follow another one in that the same room, right? The moment you are struggling to actually break that very particular one, that very particular new door that you're trying to break is more like a support, because it's there just telling you, please, you can follow the next door, or fine, I can still secure the house for you, but you still want to break that very particular one. Okay, this is how support, this is how flip zone works. The moment they have broken a new high, they will want to retrace back to that very particular high. Then when they retest that very particular high, they will start pushing to the upside. As simple as that. There's nothing more. There's nothing as very special about this whole thing. Whenever they break a new high, they will try to retest that high. You need to understand that the fact we have flip zone, we have an internal structure and a major structure. So we have an internal structure and a major structure. And you can remember vividly when I was telling you guys everything about external structure. I said whenever the market takes out an external high or an external low, there's a higher tendency the market is going to give a full retracement, a very long-term retracement that will give you massive number of pips. That is for external structure. But when we come to internal structure, whenever the market takes out an internal structure, the number of pips it's going to give you in terms of retracement cannot be compared with the number of pips it's going to give you in terms of what when the market breaks an external high. You just need to understand the different thing here. So the fact that the market printed this kind of move to the upside, let's say you see this kind of thing on 4 hour time frame is looking as simple as this. When you scale down to 1 hour time frame, you will come to realize that the market actually did printed a new high, and that new high printed is what we call a resistance level, and as I printed a new low, which is called can be called what, a support level. Still, the resistance level can still be called a higher high. The low it printed can still be called what, a higher low. Then the market will now break above that very particular that very particular resistance level, but could not actually get closer to that very particular resistance level. This is like the thing you're going to see on 1 hour time frame. The next thing you see the market pushing to the upside like this, and then the market has forcefully now break above the external high. So when you see this kind of thing now, there are two things to do. Is either you look at the external structure major resistance turn support, or you look at the internal structure resistance turn what support. So these are the kind of two things you have to look at. But there's no issue. I'm going to explain now. I know that this part will be very confusing. Now you may not understand, but you are going to understand now. So the reason why I said about the internal structure and the major structure, when you consider a flip zone as a strategy, that is support turn resistance as a strategy, you need to understand the right time to go in for a buy or the right time to go in for a sell. That is why I did a video about Fibonacci retracement tool. I sent to you all guys on VIP. Many of you requested I should do the videos. I did as well. I defined Fibonacci retracement tool in versatile ways. I tried as much as I can to give a lot of examples to make sure that you understand. And I'm so happy that most of you really passed that level, showing me the fact that you have understood how to use Fibonacci retracement tool. So now, since you have understood that very particular part, now you need to understand that whenever the market makes this kind of move, what you have to do is to plot your Fibonacci. Remember, you have to plot your Fibonacci retracement tool from that very particular low to that very particular high. You know the number one rule here is that before you can plot that very particular Fibonacci retracement tool, if the market has made this kind of move, a new high, a new low, and the market has now break above that high like this, before you plot that fib, the market need to start coming back like this. The market need to start what? Coming back. The reason why you are waiting for the market to start coming back is so that you can be able to get the height of that very particular what? The height of that very particular retracement, where you plot from the very particular low to the very particular what? High. So the reason why you are doing this thing is because you have come to understand that it is not all the support zone. It's not what is not all the support zone or all the resistance turn support is what it's that you are looking at the discount levels. You are looking at what at the discount level, and when you are at the discount level, I've always told you guys be looking at is the 78% Fibonacci retracement tool. The reason why you shouldn't be looking at the 61% Fibonacci retracement tool because I will tell you very soon. Okay, I will tell you very soon. For those on YouTube here, you might be wondering. I think I'm getting off from the teaching what is Fibonacci retracement tool. Although once there was a time I did a video concerning Fibonacci retracement tool, and I even used it to show you guys how I go in for a buy or for a sell using Fibonacci retracement tool on a very particular playlist where I talked about Fibonacci retracement tool lesson. When you open the very particular playlist, all you have to do is to click on playlist. It's going to redirect you to there. Spend much of your time to watch it to see how I normally plot it, the way I customize it, and what I explained about Fibonacci retracement tool, because every explanation here could be brief because it's not really part of a particular word video. All right, so just try and revisit that very particular playlist to understand. That's why I say take your time, don't rush. Okay, so now when we talk about you plotting that, we plot when the things start retracing and you want to go in at a discount zone. I know that 61% is the discount zone, but where exactly would you hide your stop loss? The moment you are going in for a buy at the 61% this way, now you need to place your stop loss at the low of the way at the low of the what at the low of the Fibonacci retracement tool, and you take profit at the height of that very particular what Fibonacci retracement tool. This is how it's going to look like. This is how it's going to look like. And the moment you do this kind of thing, believe me, you are risking big. You are what? You are risking big. To compare with somebody, maybe your friend who decided to use the 78% Fibonacci retracement tool, the market has booked above that very particular high. Now the market is now returning back. So this your friend actually did what? Let's drag it in a little bit high. So now he now plots the fib from the low to the very particular what high. Then now he marked out the 78% fib level, because you already understand what I said about 78% fib level. Now, whenever price takes the 78% fib level, there's a higher tendency that the market is going to react to the upside, because this is already a massive discount level. I don't need to explain much on this very particular Fibonacci retracement tool. I've told you guys where to go on YouTube, and for the VIP people, they have already passed that level. They already understand. Okay, although we have made more videos to try to understand in depth. That's why I encourage you to use that number you are seeing on the screen or the number that's on the description below to reach out to us. These things doesn't end this very particular way. It's not like after I'm done explaining this thing, you grab it once. Although some of you might even try to grab it once, but I just want to encourage you that you need somebody that should be there to keep on monitoring what you are doing, somebody that you can share your chat with. Am I getting it? Is it how it looks like? And the person will keep on consistently be helping you. That is why you need a mentor. You don't have to be so stingy to yourself and say, I don't need a mentor. You are just you are prone to failure. Okay, you are prone to what? Failure. Anything you are doing in life and you have a mentor, you are going to see a difference than when you don't have a mentor. Why wasting much of those monies that you can use just this something that is not even up to 100 USD, something that you just pay for a lifetime? The person will be assisting you. Why now wasting up to like 500 USD before you now register? It is so wrong now. Okay, so now when we talk about entering at the 61, or sorry, let's talk about the 61 before the 78. When we talk about entering at the 61, your stop loss will definitely be at the what? At the low. And then most of you will tell me, no, I will keep my stop loss inside that Fibonacci retracement too. But there's one thing you need to know. If you keep your stop loss, I don't even want to explain anything about the 50%, because that one is totally off for me. I already know the kind of thing that you're going to face, because the moment you are entering from this what they call it, from the 50%, your stop loss alone will be, you yourself will be the one to close it. Okay, so looking at it like this, so when you enter like this and you keep your stop loss just inside the fib level, you just need to know that there are two things that can actually happen. The market can give you a sniper entry and go to the upside, or the market will just tap into your zone, buy a little like this, then decide to take you out, tap into the 78 and start pushing to the upside. That does not mean that your analysis is wrong. That just means that you are entering at the wrong place. Okay, you are entering what at the wrong time, because where you are keeping your stop loss is still under a liquidity base area. You can see that the 78% low zone is where you are keeping your stop loss. So to avoid the fact you start complaining, the market hit my stop loss and the market went my way. Please, if you want to be buying from the 61, always keep your stop loss below. But if you see, when you keep your stop loss below, it's going to be very big. To compare with the person that actually kept his stop loss on the 78% fib level this way and have his stop loss just below, you cannot compare the risk of this particular person to this particular what person. They are not the same. You cannot compare this risk to this particular risk. You cannot. One is risking more little and one is risking more big. Okay, so look at this. This is how it looks like. So you're not going to tell me that on 4 hour time frame or maybe at this particular level that price didn't really respect the previous resistance turn support. Yes, when we go to the chart, you will never see as you never see this thing as simple as this. The reason why price disrespected the major structure resistance zone turn support is because when the price before the price broke a major structure high, the price did something that looked like this on lower time frames or maybe on 1 hour time frame. There was a moves like this. There was a move, a new high, a new low, and a new high. And this particular retracement could not get to the particular resistance turn support. It could not get back to the particular resistance. Then price started pushing to the upside like that. That does not mean that a time will not come on that lower time frame that price wouldn't want to come back to that previous what resistance turn support. That does not mean that in the later run that price will not what that price will not come there. And you could see that that one you spot on lower time frame is already a higher time frame 78% fib level. Is already a higher time frame what 78% fib level. Go and back test this very particular thing. 78% fib level on Fibonacci retracement to in terms of this flip zone can never be 50%, can never be 61%. If it is 61%, that means it is on higher time frame. Definitely price can buy massively from that 61%, but you just have to keep your things very low. You don't need to tell yourself, I will buy from here, I will buy from here. When price hit my stop loss here, when price hit my stop loss here, I will enter from here. Some of you might not even have the patience to wait for price to get to the 78. You just jump in for a new buy, and this you could start playing with your psychology. So I encourage you to just mark out the 78 and allow things to play out this way. So this is what I mean by flip zone. You will see now price has now returned back to respect that lower time frame resistance turn support. It doesn't mean that is what is useless. In terms of downtrend market, that is still how it works. You can see the market now print a new higher low, lower low. Whenever price print a new lower low, it's enough for price to go back. Now, sometimes you see price will now try to dip in, but price could not get to the particular support turn resistance because it was previously support. Now it's going to turn as what resistance level. Now, price could not get to that particular level. You start seeing price dropping to the downside. You will tell yourself that everything about the particular support or resistance has failed. That's a lie. That's a word. That's a lie. When we get to liquidity, you understand what the market actually did here for early buyers and for early sellers. The next thing now you see the market now start pushing to the upside, respect it, and then start dropping to the downside. Okay, this is still how it's going to look like the market break again, retest it, and then start dropping to the downside. So this is what I mean by flip zone. Okay, you just need to understand that even if the market disrespects the higher time frame structure, that the market is seeking the lower time frame 78% fib level to start dropping to the downside. Although though that those people that normally trade flip zones or normally trade support and resistance normally take entries from that 61% or 50%. Some of them doesn't even value the 78. They value the 50 or 61%. I'm just giving you an instance, telling you the pros and cons that are involved on this very particular strategy, because whatever I do, I love telling you the full secret in it. Okay, now let's go to the chart to try to mark out the support and resistance there to see whether you could even see one. Okay, so now let's go to something like USD JPY. So many of you will tell me this one you are using only yen pairs. You are using JPY pairs. Does that mean that this thing only works on only JPY pairs? No, it's a lie. It works in all pairs. It works in what? In what pairs? You can go and back test it. Okay. So now I try to compress the chart. What exactly is the market doing? So we could see that from here the market is terribly, or the market is really bearish. The market is strongly bearish. Okay. And now whatever you should be looking at here is a support turn register, because the market is actually breaking the support levels and is now turning the support levels into a resistance level. This way, whenever the market prints a new high, it breaks the support level like this, and it's coming back to retest the support level that will now turn to be a resistance level. Okay, support turn resistance, something that look like that. So now let's see. So the moment you see this kind of thing now, whatever we are seeing here on forward time frame and major structure, when you still go down to lower time frames like 30 minutes, you will still see what price is doing there. So let's try to understand what really went on around there. You could see that when price came over to the particular place, we could see what we call a massive consolidation phase. After all this consolidation, price escaped from the range, price escaped from the sideways, and started dropping to the downside. So there is this particular thing that is here. This is what we call a support level, or we can call it, or you can call it, sorry, you can call it a what? A support level. So this is what we call a support level. There was a time it was really a support level for buyers here. When price prints the upside, it comes back to respect, it comes back to respect, it comes back to respect. So now the resistance level is somewhere around the particular what zone. So whatever you are seeing above the resistance level, those things are what I call spike. I call it what? Spike. This is just the market trying to spike above that zone to collect a lot of people's stop losses, or a lot of people stop losses, because you know that a lot of pending orders is resting there. So now the moment price break below that very particular major structure, I just wanted to understand something. The moment price breaks a support level like this, or maybe a resistance level, always expect price to come back to retest it. Always expect price to do what? To come back and retest it. And it was and it's not and it is in that retest that you are entering. You are not entering at the breakout. You are not entering at the what? At the not time that price is breaking out of the out of that very particular support level or resistance level. You enter buy around there, or you enter sell around there. Is wrong. Now you need to wait for a retracement, just like the way I've always told you. When you see that retracement, you start selling to the downside. Your stop loss just above the resistance level, because you need to find where to hide your stop loss. So the moment price actually broke it, you can see price has been respecting it for some time. We have the first touch, one, two, three, and the fourth touch, price break it. So I know that you cannot really see the retest here immediately, but I also want to tell you that we equally have another support zone here as well. This is another support zone inside that very particular major structure support zone. So now let's scale down to something like 1 hour time frame to see whether price really, after breaking it, whether price actually retested it. So now when we go down to 1 hour time frame this way, so this is it now on 1 hour time frame. I think the structure is it really still clear. This very particular one is okay. So look at what happened. Look at the time the price came back to that higher time frame support level. He bought a little and push to the downside. And remember what I told you guys about break. The market need to break with a full body candle. This is what I call a full body candle. You can see it's what I call a full body candle close. Even if you are marking BOS, this is the full body candle. Can you see this is the proper what? BOS. This is what I call a valid BOS. I call this thing what? A valid BOS. The week here doesn't really matter, because already what's break below the low is what? A full body candle. So even when you look at this is a full body candle close, and the full body candle close is just breaking below the higher time frame support zone. So what you should do is to expect a retracement. Expect what? A retracement. And now you can see with the moment price break it, the price retested the higher time frame what? Support level. Now the support level is turning as resistance level. A lot of sellers went in here and sold the market to the downside. The same way that people that were looking for a BOS, waiting for a retracement to sell price to the downside, that was how they make their profit. Okay, so now you could see what the market did. The market came, retested it, and then fell to the downside. And after some period of time, you could see the market keep on respecting it like this. So when we try to extend it this way, so you see whatever you are seeing just above this very particular support turn resistance, that is already a resistance level. This 1, 2, 3 is because the market has already knew that a lot of people pending orders are above there. That is why they are spiking above those levels to collect all your stop losses. Although we know we have a support on resistance here, which we know that in later time in the future, price might still want to come back to respect this zone. Okay, so now you can see the market now drop to the downside. So you should also know that it's not every time that the market break a support level is when it's going to come back to respect it. We have different strategies in the markets. Because since as we have a support storm resistance, we have people that normally look out for full retracement. And those guys that look out for full retracement are those guys that trade from 78% fib level. So when price actually give a 50% discount, sometimes it's going to give a 61% discount. Sometimes it actually needs to give what a 78% discount. So during those periods, you might be losing if you're actually trading support turn resistance. So now in a particular part now, we could see that there was nothing like any respect here. Price did not even respect it here for one bit. We have a support level here like this, and we extended it. There was no respect. Price just did everything to destroy that zone entirely. We could see, I think it was even somewhere around there that price even came back to respect it this way. So you see when this is another this is again. You see how price destroyed that, and then the next thing again we have another support on resistance here. So we have another support on resistance here. So in a particular period of time, I think the market the strategy is not really profitable this time around this particular zone. It's not really working here. But look at what really went on around here. Just look at what really happened there. I think I just want to show you guys what really happened around this zone. Look at this particular part. You have to understand. Most of you guys need to follow the particular channel, like and subscribe to the channel. Do you know that a time will come? I will tell you guys. Sometimes you see the market will be disrespecting your strategy. You will think it's because you don't know what you are doing. That is because it's not really time for those your strategy to be playing out. Okay, and I will tell you how to stay profitable during those periods, which is by the good risk management. You can see that because you can see that working here, very perfect working. Imagine that you have been trading support on resistance here. You'll be making a very good profit. Whenever price break, you saw the retest, you went in for a buy, push the upside. Now price have actually broke a particular one again. You can see the break, the retest, push to the upside. Now again, price printed a new low, retested, and then push to the upside, retest, and keep pushing again to the upside. You can see the strategy really playing around the particular zone. He really played out very, very well here. I think somewhere around there. He really played out as in he played out back to back. So this profit is enough for yourself to be able to stay on profit during the particular period. That is why I encourage you to find a way and enroll into the academy, so that even when you are making all these profits, you will not be overexcited, because you know that the rainy days will come, and when the rainy days come, you will not even feel scared, or you will not be on loss, because you have accumulated a lot of profits. Okay, so this is everything about flip zone. Always understand that it's just like a support and resistance, which you could see I've extensively explained. You don't enter at the breakout, you enter after the retracement. Is this thing not the same thing as what I said about higher highs and higher low and lower low? Is it not the same thing? It's the same thing. All right, so please, if you have your question, drop it on our private DM. As for the VIP, drop it. If there's anything that is confusing you, I encourage you to drop your questions. Remember how we do it. We'll send you more videos to enable you to understand. Should in case you are here on YouTube, that does not mean that I'm overlooking you guys, but you know that some things are limited. Okay, so you can actually only drop your questions. I think I will actually want to help as well. And what I want you to do is don't forget to comment, like, share, and then also subscribe to the channel. Don't forget about that. So this is where we are going to stop, because we have really seen how to do this particular flip zone. Watch the video again. Watch the video again. 1 2 3 times. 1 2 3 times. 1 2 3 times. Just 3 times. Believe me, you will surely understand whatever I meant. It's not meant to be understood once. Just 1 2 3 times. You will definitely understand what I meant on today's lesson. Okay, this is where we are going to come to an end on this very particular video, and I want you to get ready for the next part where we're talking about POY. So this is it. We'll be talking about point of interest. This is point of interest. We'll be talking about the unmitigated and mitigated point of interest. So thank you.